and good afternoon. My name is Prita. I'm from the Consumer and Investor Office at the Securities Commissions Malaysia. We are pleased to have with us today Ms. Koh from Federation of Investment Managers Malaysia, FIMM, to present on the topic Making Sense of Unit Trust. Allow me to share a brief background on Ms. Koh and FIMM. Ms. Koh is a General Manager in the Industry Services Division at FIMM. In this role, Ms. Koh is responsible for FIMM's industry services initiatives, which includes industry development, research and analytics, as well as professional development. As a self-regulatory organization, FIMM is empowered to regulate and supervise the marketing and distribution activities of its members and the registered person to achieve the highest level of integrity and standard of practices that will best serve the investment management industry as well as promote investor protection. Now, please stay tuned till the end of this session as we'll be having a short Q&A session followed by a pop quiz session for all participants. As mentioned earlier, RM 1,500 in online vouchers are up for grabs. There will be 5 top winners and 20 cancellation prizes. Winners will receive an email within 24 hours. Further to this, we would like to invite all the participants to take our survey. The link is shared in the chat window. Next, please. Please do follow us on our social media platform for useful information on investing and latest update on our initiatives. Now, I would like to pass over to Ms. Koh to share her presentation on making sense of unit trust. Ms. Koh, over to you.
Hi, thank you, Prita. Thank you for having me. Let me share my slides. So, good afternoon, everyone. I'm Koh, General Manager and Head of Industry Services Division from FIMM. Before I start the presentations on unit trust, I would like to share with you some information with regard to FIMM. So FIMM has been recognized by the Securities Commissions Malaysia as a self-regulatory organization, or SRO in short, in year 2011. With the recognitions, FIMM plays a dual role. On one hand, we act as an industry body that facilitates the growth of unit trust and private retirement scheme industry. On the other hand, as a SRO, we we regulate distributors and consultants to protect investors' rights through the establishments of rules and promote ethics and integrity. Now, Benjamin Franklin famously said that the only 2 certainties in life are death and taxes. Now, in the 21st century, we can add a third. The need to save for retirement. Now, for Malaysians, the average retirement lasts about 16.5 years. Assuming most of us retired at the age 60, and our average life expectancy is at 76.5. Now, consequently, any retirement plan needs to focus not on income, but also growth. As without growth, your retirement fund will not be able to keep up with inflations. That said, with market valuations as well as volatility hitting one of the highest level last since during the 1990s, we need to be careful. Suffering a severe adverse market early in retirement can deplete your portfolio and materially reduce your living standards for the rest of your life. So you should protect yourself along with growth and income. Retirees and those nearing retirement also must consider safety, perhaps a little bit more than usual. And a better understanding on unit trust can provide you with exactly such an option for balancing growth, income, and safety. Without further ado, now let's look at what are the unit trusts. Unit trusts are basically a form of collective investment that allowed investors with similar investment objectives to pool their savings. A pool of savings collected from investors will then be invested in a portfolio of shares as well as other assets managed by professional fund managers. The unit trust industry is highly regulated, and only unit trust management company or UTMC that are licensed or approved by the Securities Commission Malaysia are allowed to manage unit trust funds, including offer for sale of units of the funds to investors. Now, how unit trusts work? You may wonder what happened to investors' money when they invested in a unit trust fund. So this is you, right? So let's say that you have invested in the unit trust fund by buying units in the funds. So once the funds is actually invested in the funds, the fund management company will manage the operations of the funds. And the money collected from the many investors will be invested in authorized investments as specified in the deed of the fund. So what are those authorized investments? It consists of stocks, bonds, derivatives, money market, as well as cash. So we have another third party called trustee, who actually in the whole scheme of the things of the unit trust fund come in and safeguard the assets of the funds. And from the returns that received from the stocks invested by the funds, be it dividends, income, interest earned, as well as capital gains that received from the stocks when the fund actually sell off the investment that they used to hold on to. So all these form part of the returns that they can be distributed back to the investor via two modes. Firstly, via the income distributions. So means that as a man, certain funds that have already received certain level of incomes or the returns, they will actually declare the dividends or the income distribution back to the investors. Okay. On the other hand, so unit trust investor, you can actually sell your units when you find that the prices of the units that you are holding on is actually increased a fair bit or to a level that you are satisfied and you want to sell it off. And because of that, you earn a certain level of profit. This is what we call a capital gains. So you can actually receive the return in this form from your investment in unit trust as well. So what are the benefits of investing in unit trust? Firstly is the diversification. So as a collective investment scheme, money from investors will be pooled and invested in many stocks or assets, and hence minimizes exposures to single stock or assets risk. Now, this will allow investors to access a broader range of stocks and assets than they could be able to when investing on their own. Secondly is on the liquidity. Now, investors can buy and sell units at ease compared to direct investment in shares of companies. Now, this liquidity allows investors more control on their cash flows. Next one is on the tax benefit. Interest income as well as capital gains are generally exempted from tax. More importantly, unit trust funds are managed by professional and full-time fund managers who have the necessary skills, experience, and dedicated resources. By investing in unit trust, investors may worry less as fund managers does it all for you. So lastly, unit trusts are affordable. Investors can start investing in unit trusts with minimal capital outlay. Most funds accept both small and large investment, making it affordable for the average investors to get started. Now, unit trusts offer a range of products with different risk levels and potential returns. Depending on the investment objective as well as the predominant assets held by the funds, unit trust funds generally can be classified differently by risk level to suit investors that could take different level of risk or risk appetites. Now, some investors are conservative. For example, they are totally new to investment, just like a swimmer that doesn't know how to swim. They may be interested to look at a lower risk funds. As investors gain more knowledge and experience in investment, their risk profile may be changed from conservative to moderate or even aggressive. He or she will then can look for different funds to meet his investment needs and inclinations in terms of the risk level. Now, some funds are low risk funds. Now, they are suitable for investors. They are new to investment, like swimmers who don't know how to swim but just want to dip their toe and splash on waters. Like adage goes, no pain, no gain. Such funds will generally provide low returns as well. Now, what are the common type of unit trust fund? In general, unit trust fund can be categorized differently according to the type of assets and investment strategy adopted by unit trust. For example, money market funds are funds that invested predominantly in money market instruments such as government bonds and treasury bills and deposits in financial institutions. Bond funds, like the name implies, are invested mainly in bonds and other fixed income instruments. So equity funds invest mainly in equity. And lastly, mixed asset funds that could invest in a bit in equity, bond, or money market, which will give a result of a balanced sort of like portfolio for those that who are looking for a balanced exposure in different type of assets. Now, how do I invest in on the unit trust fund? So first of all, you must give some thought before investing. So you must know what's your risk appetite. Are you a risk averter or are you a risk taker? That will impact on the type of the funds that may be suitable for you. Secondly, charges and potential risks. Each and every funds, or most of the funds actually impose certain level of charges to investors. So some may come with the higher charges, some may be lower. So look for what are those funds that provide or charge or provide or impose a level of charges that in line with the services provided to you. And of course, just like mentioned earlier, so each and every investment comes with certain level of risk. So do look for those funds that have the risk exposures that in line with your risk appetite. So, and of course, you must know where are you or why are you investing and what's your targeted returns. And lastly, how long you intend to invest. So all these basic information will actually provide you with fundamental in selecting what type of funds that you can invest on, through which channel you should invest your money with. So there are many type of channel that investor can access or put their investment in unit trust. Firstly, they can actually invest through unit trust management companies via their online portal or the agency force. Secondly, you can actually invest through bank or stock booking companies. Of course, you can actually meet up with financial planners who can advise or provide you advice on what type of product that suitable for you, and also providing you with a good plan on your overall or holistical financial planning that you need to address your overall financial planning needs. And lastly, of course, the fund platform or the fund supermarket, which is suitable for those investors that who are keen, who enjoy a lot in doing their own research, and therefore they can actually proceed to invest directly or by themselves. And of course, there are many advertisements that put forth before the session starts. There are a lot of scams that are available in the market at the moment. So do be be aware of such scams and be careful when someone actually give you or propose to you a certain investment proposal that looks too good to be true. Yeah, so you please make sure that you must be very careful when deal with when someone actually bring along with such a proposal. And also as efforts to counter scam, please take note that all unit trust consultants are not allowed to receive cash or make sure that you are dealing with only the consultants that authorized consultant, or those that who registered with FIMM. Now, how to ensure that whether the person approach you are authorized as a consultant, you can actually visit FIMM's website. So there is a web page called "Is My Consultant Authorized?" Just put in the relevant details and you click search. So the status of the registration for an individual will be actually displayed here. So whether that person with the registration status which is active or already terminated, so you will be able to find out by visiting this website. Yeah, so sorry. So now the second is like as an effort to counter scam. Please take note that all unit trust consultants are not allowed to receive cash from investors. So except when they are operating over the counter, such as bank or UTMCs, the branch officers. So these are the video that send some of the message. And also, as a way to protect yourself as an investor, please do not pre-sign an incomplete investment application forms, as by doing so, it may subject you to be manipulated by unscrupulous person. Saya tanda tangan dulu, nanti awak isikan. Berlakulah secara bijak. Di FIMM, kepentingan berlaku keutamaan. So, and of course, if you have a complaint against a disputer or consultant, you can actually lodge a complaint on them by visiting FIMM's website, complete and submit the complaint form to FIMM. You can lodge the same via SC's website too. So this is the end of my presentations. So I will be happy to take on your questions. Over to you, Prita.
All right. Okay, thank you very much, Ms. Ko, for your very informative presentation. So now we'll move on to the Q&A session. So we have a few questions on Slido. Okay, so the first question, is there unit trust for gold?
Okay, thank you very much for this question. It is indeed a very good question. Yes, we do have the unit trust fund that invest in gold-related ETF, gold-related assets, but listed assets. Yes, but we do not have any ETF that invested in physical gold directly at the moment.
Okay, all right. Okay, so the next question is, will unit trust agents advise us when to sell?
It depends. Normally, good consultants will be able to come out with an investment plan for the investors and periodically help the investors to go through whether the plan needs to actually reshuffle in line with the changes in the investors' financial conditions or even the personal condition. For example, like now, he used to be single, now already married with a very young kid. Now, all these indicates that the previous investment plan may no longer be suitable for the investor. So now through the process of revising this investment plan, so there will be time whereby a certain portfolio need to be actually sold off and switch to another maybe a lower risk kind of funds or funds that with the exposures to different kind of assets, which is more suitable to the investor's current financial status. Now, through the process, yes, the consultant will be able to advise the investors that when certain holdings or when certain funds need to be sold and which or switched into a new type of funds.
Okay, all right. Okay, so the next question we have is PRS returns better than EPF?
Okay, it is a very difficult to compare between PRS and EPF because both are actually governed differently. One is by EPF, which is reported directly under the MO Act. The other one is actually under the SC, and PRS are a voluntary scheme whereby EPF is not. So it's very different to compare between the two because their structure are totally different.
Okay. All right. So the next question we have is, why would senior citizens, especially retirees, need to invest in unit trusts?
Okay. As I mentioned earlier on, so okay. A retiree, if you look at your portfolio, if you are only solely looking for income, so chances are without the growth, chances are you will actually face a risk of not able to beat the inflation. So therefore, you need to look for a suitable investment which is not so risky, but with a medium to moderate level of risk that suit your financial status for a retiree. Especially we are looking at a situation, mostly situations whereby the retirees are no longer gainfully being employed. So a unit trust have a wide range of products with a different level of risk and different exposures to different kind of assets that will give the retirees plenty of choices to look for products that are suitable to their risk level.
Okay, so the next question we have is on authorized consultants. Most of them use their Christian names or abbreviated names, example KS name, instead of full names. How do we verify via your website?
Okay, for those agents that are not printing their names on the name card as per the IC, what you do is like if you can't find, you can't look for the result from the page, so what you can do that you can actually email or contact the management companies to do the verifications. So because each and every consultants, they have to attach to a principal, either a unit trust management company or a bank or a stockbroking company or even a financial planning company.
Okay, all right. So the next question is, if a unit trust holder passes away, can the beneficiary still continue investing? Can the UT be transferred to a beneficiary account?
This case it depends on whether the deceased investors already have a will in place. If you do have a will in place, then everything will actually follow the wills. But if the deceased investors die interstate, so there will be a lot more complicated and longer time taken for the process to be completed before the units can be legally transferred to the person who are nominated as the inheritors of the units.
All right. So the next one is it better to buy new or existing unit trusts?
There's no difference. The more importantly is to consider your investment objectives as well as your financial status at the moment. So is the portfolio that you have currently still valid and good in line with your latest financial status? If not, then you have to look at not only the new funds, but the existing funds that can actually provide you with a better exposure or a better chance to help you to achieve your objective. So pretty much to ask yourself whether the current portfolio is still makes sense. If yes, continue. If not, look for other funds, not only new unit trust fund, but all other funds that will be able to provide a better sort of like potentially a better investment outcome for you. So now how to do that? So you can actually, if you are the type of investor who like to do it all by yourself, you can make use of the research or the information available under the fund portal, or if you are the kind of investor who like to receive advice from another consultant, you can approach any of the consultants to seek their advice.
Okay, all right. So, okay, we also have some questions on the chat. So, all right. So the first question we have is, what is the difference between unit trust funds and hedge funds? Are there hedge funds allowed to operate in Malaysia?
Okay, hedge funds are not allowed to operate in Malaysia. So unit trust fund are regulated by the SC. Hedge fund is not.
So the next question we have is, how long to hold for fair returns, and also how much is sales and switching fees?
Okay, I go for the first question first. So now, how long should hold on to the units? It depends on the investors' conditions. So on average, or in general, unit trusts are for long-term investment. So we are not looking for an investor to invest in unit trusts for weeks or even a year. So we are looking at 5 or even 7 years, so that the investment portfolio in the unit trust fund can actually run through the cycles and give you a good returns. And of course, more importantly, it relies, or you have to look back on your own financial status. So are you actually targeting for investment tenure which is a longer term or medium term? If it's the longer term, you can actually put there and let your money grow together with the unit trust fund. But if let's say it is medium or the short term, you may look for the funds that actually with the intentions to give you that kind of exposure. For example, like money market funds are for you to actually look for a very extremely short kind of a tenure. So for your investment, and a certain the other funds, the other type of funds maybe actually go for a much more shorter, for example, like 3 to 5 years. So it all actually disclosed in the prospectus. So when you before you invest into the funds, take a look at the prospectus and look at the investment objective and the strategy, so and see whether it meet your personal investment horizon that you're looking for or not.
Okay, so the next part of the question was basically on the switching fees.
Okay,
yeah.
So it depends. Switching fee is a very complicated sort of like the arrangement. Why? Because the intentions for most of the company as well as the distributors are very simple. So they would like to only charge you once and not more than that. So switching is actually talking about you selling one fund and then you invest into another funds. So the switching fee will normally depends on what is the difference from the funds that you invested and you intend to switch it out, and the funds that you plan to switch in. So if let's say you invested in the funds with sales charges which is higher than the funds that you're going to switch into it later, so they will know there will be a zero switching fee. But on the other hand, if you invested into a fund which charge a fee which is lower than the funds that you intend to switch for, so in this case, you need to pay the switching fee, which is equivalent to the difference between the two levels of the sales charges. So these are the common principle behind the switching fee.
Okay, so then we have also a question. What is your advice for a simple rule of thumb method to decide when to sell and when to switch?
Okay, I look at it, it's like it all still goes down, boils down to each and every investor. One method which is perfectly good for me may not be suitable for another investors. All boils down with you. Why? Because it has to actually refer to your investment objective, your investment horizon. So and your personal financial situation at the point in time. So all these three will decide whether you are still good in holding on to whatever portfolio that you are having, or it's time for you to sell it off and look for other investments instead. Yeah.
So the next question is there any capital guaranteed funds presently?
We used to have a lot of capital guarantee when the interest rate is actually quite high then, but now we don't have many more such funds anymore.
So, all right, the next one is sales cost is payable at purchase point for buyer. Are there any costs payable at exit sale?
Most of the funds, they do not impose on the exit sales charges, except for those funds with a fixed tenure. For example, like if you invested in the funds that already disclose it in the prospectus that they will only open up for 3 years. So investors who invested in the funds expected will hold on to the investment until the end of the tenure, which is 3 years, only they will redeem. So, but if there are cases whereby redemption happen before the expiry date of the fund, then during such cases, the exit fee will be imposed.
So the next question is, how can I waive or minimize fees that need to be paid to agents/consultants?
Okay, first of all, you have to make sure that what is your investment goal and your investment tenure, so that once you invested, you are actually know that your money is at a good hand and for a longer term. The worst thing will happen, and therefore will actually increase the charges that you pay to the consultant, is you keep on churning. You buy and you sell, buy and sell, because each time you churn, there will be a set of the commissions that incurred by you, and it will be added on to as part of your investment cost. So identify your investment goal, know your risk profile, and ascertain your tenure of investment will really help you to minimize the churning of the investment, and therefore minimize your costs.
So we have one last question. So the question is, in the event a unit trust joint account holder passes away, can this surviving joint account holder take over the whole account?
This one, I do not have answers for you. So because it's very operational. So let me check it out, and I will feedback to the SC.
Okay, so that's okay. We have answered all the questions, Ms. Ko. So thank you very much for the Q&A session.
Thank you.
With that, we have reached the end of today's webinar. Stay safe, and if you need to be out, always maintain physical distancing. Hope to see everyone again in our next webinar. Thank you.